Hey everyone, welcome back to Business Basics Hub. I'm absolutely thrilled you're tuning in today because we're going to dive right into a clear, totally actionable explainer on exactly what a not-for-profit organization is, and more importantly, how you can build one from the absolute ground up. You know, whether you're a small business owner wanting to organize a local trade group, or maybe a community leader starting up a youth sports league, getting this legal structure right from day one is literally everything. So let's just break it all down. Now, right before we jump in, just a quick reminder on our standard disclosure. This explainer is for general educational purposes only. It's not legal, tax, or financial advice. We all know laws vary depending on your state and your exact situation, so always consult a qualified professional to guide your specific journey. All right, here's our roadmap for today's explainer. 1, we'll cover the big definition. 2, why NFPOs matter to you. 3, a quick step-by-step guide. And 4, we'll look at some common beginner mistakes.
Okay, let's start with section 1, the big definition.
So what are we actually talking about here? Well, a not-for-profit organization, or an NFPO for short, is basically a legal entity where absolutely nobody takes home the profits, right? There are no owners in the traditional business sense, you won't find any shareholders, and there are definitely no dividends getting paid out. If your group makes a little extra money, say from member dues or a bake sale, what we call a surplus, every single penny of that has to be reinvested straight back into the organization to support its main mission. But here is the absolute most important part you need to remember. An NFPO exists solely to serve its own members, not the general public, its own members. And honestly, this right here illustrates the ultimate difference. People use these two terms interchangeably all the time, right? But legally, they're totally different beasts. Think of it like this. A traditional nonprofit, like a local food bank or the Red Cross, serves the general public on the outside. A not-for-profit organization, on the other hand, serves the people on the inside. It strictly lets the people who actually belong to it, pay dues to it, or participate in it. Inside versus outside. That's the real game changer.
Moving on to section 2, why NFPOs matter to you.
Now, you might be wondering, why should I care about this? Well, you should care because I can almost guarantee you interact with NFPOs every single day. If you've ever wanted to organize a local soccer league for your kids, or maybe set up a neighborhood homeowners association, or even create a local business chamber for your specific industry, the NFPO is exactly the structure you need. It's basically the perfect vehicle for pooling resources with a group of people to achieve a common goal that benefits everyone in that specific group.
All right, that brings us to section 3, the step-by-step guide.
Okay, let's dive into this simple roadmap for actually creating your own. These first 5 steps, they're all about your initial planning and your state filings. Step 1 is defining exactly who your members are and what your mission is. You have to nail that down first. Step 2 is choosing your IRS classification. Remember how we said NFPOs aren't those famous public charities? Because of that, they fall under totally different tax codes, like maybe a business league or a social club. Step 3 is filing the actual paperwork with your state to form the legal entity, which is usually a nonprofit corporation. Then, Step 4, creating your bylaws. This is basically your organization's internal rulebook for things like how you're going to vote and hold meetings. And Step 5 is appointing a volunteer board of directors. These are the folks who will help lead the charge and make those big decisions. So, let's look at the second half of our roadmap, where you build your organization's financial foundation. Step 6 is getting your free employer identification number from the IRS. You can think of it like a social security number for your group. Step 7 is officially applying for your federal tax-exempt status. Step 8, and a lot of people miss this one, is remembering that federal and state governments are totally different. So you usually have to apply for state tax exemptions separately. Step 9 is opening a dedicated business bank account using that shiny new federal ID you just got. And finally, Step 10, you've got to set up solid financial controls. We're talking things like requiring 2 signatures on any big checks. It just keeps everyone honest and ensures your funds stay completely safe. Next up is Section 4, Common Beginner Mistakes. Setting one of these up is totally doable, for sure. But what do most beginners get wrong along the way? Well, I want to ask you this specific question right here, because the answer literally shocks almost every single new founder we talk to. Are donations to your new NFPO tax deductible for the donor? Take a quick second. Think about what you'd guess. Got your answer? Well, here is the harsh truth, folks. Unlike a public charity, when someone gives money or pays their dues to your local sports league, your college fraternity, or your HOA, they generally cannot write it off on their personal income taxes. No way.
Remember our big definition from earlier? Your organization serves its members, not the general public. And because of that distinction, the IRS says donations to your group are not charitable gifts. This is a massive, absolutely crucial distinction that you have to know before you even start trying to fundraise. So, the crucial point here is to avoid these other major traps as well, because I really want to support you in getting this right from the start. First off, tax-exempt does not mean tax-free. You still might have to pay taxes if you have employees or say you make money doing things that are totally unrelated to your main mission. Second, please never mix your personal money with the organization's money. That is just the quickest way to ruin your legal protections. And finally, whatever you do, don't forget that you still have to file an annual informational return with the IRS. Yes, even if you are entirely volunteer-run and don't owe a single cent in income tax. If you forget to file that form for 3 years in a row, you automatically lose your tax-exempt status. Poof, gone. You definitely don't want that.
And that brings us to Section 5, Conclusion and Next Steps.
To wrap things up today, just remember that an NFPO is an incredibly powerful tool for organizing your community, as long as you remember it serves its members first. Now, if this explainer brought you some clarity today and helped you understand these business basics just a little bit better, please go ahead and like this explainer, subscribe to the channel, and turn on those notifications. We're building a huge library of straightforward, zero-fluff guides right here at Business Basics Hub, and I want to make sure you never miss out on the next one. And as always, please remember this explainer is strictly for general educational purposes and isn't legal, tax, or financial advice. Definitely consult a qualified professional to guide your specific journey. So I want to leave you with this final thought. Look at your own networks today. What specific problem in your community are you going to solve by building an NFPO? Thanks so much for learning with us, and I'll see you in the next explainer.